Another reason not to have everything in pre-tax accounts. You remember a couple months, 6 months, something like that ago, where I had a lady whose husband died. Husband was 62. She was 54. Remember, from Alabama, and I got on the horn with her and the guy from Vanguard. We had a chat about how they, I hate to say recommended, how they presented her options. Unfortunately, she rolled his IRA over to her name. Not as an inherited IRA, but in her name specifically, so now she owns it. And what the reason that's not the right move is because she's under the age of 59 and a half, any distributions from this IRA are going to be subject to a 10% penalty. If she would have kept it as an inherited IRA, all right, where it's still in his name, but she's basically the beneficiary as inheritance, she could take the money out without a 10% penalty. Remember that? And so we got on the horn of Vanguard, said, you guys got to fix this, man. This is just bad financial planning. And they said, oh, she said she wanted to do it. It's like, did she? All right, well, anyway, I had the same case with the guy I'm working with today. He's 54. Wife is 48. Sadly, the wife just died. Well, in October of last year. It just breaks your heart, dude. And just sad, no other way around it. And it's emotional. You know, we said our prayers for her, you know, being in heaven, but for him, because, you know, we all, if you're a Christian, you know, you go to your greater reward, literally your greater reward. Doesn't mean you don't have pain down here, knowing you still have pain, because you're missing your freaking, your significant other, man, your soulmate. You're missing her. You know, I was telling her about today, like Charlotte and I text all the time, you know what I'm saying? Like all the time, like, hey, I'm getting ready to work out. Hey, I'm getting ready to, what do we want for dinner? Hey, I'm at the store. Hey, you know what I'm saying? All the time. Oh, did you see this picture of the dogs? And, you know, to turn like, hey, I got a cute picture of the dogs. Oh, there's no one to text it to or talk about. It's just freaking, I mean, the small things. That's what this guy told me, the small things. Anyway, so in this case, she has an inherited IRA, or she has an IRA, and he did what he's supposed to do, which is only have it as an inherited IRA, all right? That way there's no 10% penalty. 10% penalty? No, which is what we want. But there's a second part of this right here. I mean, he's not even working anymore because, like, I don't need the money because, you know, he's just not going to run out of money, dude. Just not going to. It's not even close. He's going to be fine. The problem is, though, for healthcare, health insurance, even though it's an inherited IRA, it's still going to be taxed. So while you don't have a 10% penalty, you still got income tax you got to pay on this. Still paying tax on this. Guess what? Health insurance. He doesn't have. He's on COBRA right now. But other than that, he doesn't work, so he's going to be going on the ACA, Affordable Care Act. Thanks, Obama. So affordable, you can keep your plan. You lying sack of excrement. Look, they all do. I get it. 100%. Sniffy Joe does. Hell, Trump does. I mean, we're going to get the end of the. We're going to show you what happened on the vax, and, you know, JFK files and all that. They all lie. That's just all there is to it. But Obama, the Affordable Care Act, like the Patriot Act. Thanks, freaking Bush, scumbag. It's a Patriot Act. I fell for it. How is ACA based on? It's based on your income. So while this income from an inherited IRA is not subject to a penalty, it's certainly subject to taxation, which goes into determining how much his premium is going to be. All right. Thankfully, this is what I was trying to get across this guy. I'm not sure he quite gets it, but I said, thankfully, she also has she had like $250,000 of life insurance. This is tax-free. So he has basically 10 years before he's on Medicare. So I showed him, I didn't go to Penn, I forgot what's called Penn Care, because Pennsylvania has their own Obamacare place, but I showed him here in Fulton County, Georgia, that if he kept his income at $40,000 a year or below, right now he'd basically be getting on Obamacare premium credits, $650 a month in premium credits. That's tax-free. But he's got to keep his income below $40,000. Not his spending power, his taxable income, his Maggie, if you will. All right, so you got to keep it below 600. If it keeps it below 40,000 as a single guy, he's going to get $650 a month in premium credits, which means his insurance premiums are going to be freaking very, very low. And for probably a good policy. Again, I don't know about Penn Care or whatever it's called up there. I just know here in Fulton County, you can get a good policy for pretty doggone cheap if you keep your income below a certain threshold. But what if she didn't have this life insurance? What if all she had was IRA money and he had to tap it all, which happens a lot? Then he's going to have to take the money out of which to live on. And he needs about $6,000 a month, all inclusive. He still has a small mortgage. He's like, I need $6,000 a month. $6,000 a month plus income tax is about $80,000 a year. $80,000 a year is twice the $40,000, which means he's going to lose those Obamacare premium credits. So because she has life insurance, we take $40,000 here and $40,000 here. All right, or basically 40-30. So I think it's 40-30 is what we're doing because it won't be a tax. The tax will be minimal, something like that. And that way, $40,000 is taxable income, which qualifies for Obamacare. He won't be on Medicaid. And then $30,000 is tax-free. Not just because it comes from life insurance, but because it's in a post-IRA account. It could be a Roth, could be a brokerage account. It could be life insurance and a cash account. It doesn't matter. It just matters that it's not coming from an IRA, inherited or otherwise. And because it's not coming from an IRA, it doesn't flow to your 1040. And your 1040 doesn't pick it up, and that's what Obamacare is based on. What is your 1040? And then they add back in municipal bond income, Social Security income, whatnot. Well, in this case, his 1040 is clean as a whistle because it's only his distributions from his IRA, $40,000. That's why you can't have everything in a pre-tax money. You've got to have some post-tax. I got a guy email me yesterday or 2 days ago. He said, Josh, I'm only going to work for another year. What should I do? Should I continue to do my pre-tax? I said, no, build up cash, build up cash, build up cash. And he emailed me back and said, well, I got a bunch of cash. I said, well, in that case, a Roth is fine. That's why I just say, man, pay the taxes while you got the money because you don't know what the future holds. It's not just income tax, it's healthcare, tax on healthcare. Again, a tax is not specifically a tax, but if you lose a premium credit, you're paying, that's essentially a tax. Because if you had tax-free income or post-tax income in a brokerage account, you could have got that $650 a month Obamacare premium credit, tax-free. If you don't have that, if everything's in an IRA, guess right here, IRA, guess what? You don't get a tax-free. You don't get a premium credit. That's freaking $8,000 a year right there, just gone. Anyway, love your thoughts on that. Just pray for your fellow man and woman. Just say your prayers, man. It's a good thing to say your prayers and pray for those who find themselves suddenly as widows and widowers, because it's just sad. All right, God bless. And it's hug your wives, hug your husbands. Do it now. Hug your children. Yeah, it's easy to get caught up in the day-to-day, but man, time flies, dudes. Time flies. All right, God bless.